Why rising markets, right? Because they're growing faster, and there are a few aspects to it. First, I think this is not a lot of new stuff, but just to remember that what we call rising markets, there are three big markets there, which are Brazil, Mexico, and India, which are part of the top 10 markets in consumer spending. So India is number 3, and then there are also Brazil and Mexico among those top 10. So we say rising markets, sometimes we kind of position them below the developed markets in some aspects, but in terms of consumer spending, Brazil, Mexico, and India are top 10. And they're just gonna keep on growing. This is very important. The overall consumer spending of the economy in the next 10 years. Also, there's another group of markets, especially in Africa, which is maybe smaller in size now, but they are the ones that are going 3 digits and are going to reach incredible scale in the next 10 years, especially when you look at countries like Nigeria and Egypt. It look like 400 billion, 600 billion in economy. And of course, Ethiopia, which is a country that we've been talking a lot about with our merchants, also coming up. Then moving from consumer spending to digital commerce, that is even more important, right? That is our world, online payment acceptance. And this is probably the definition. Rising markets grow more, so a CAGR of 20% compared to 13% of developed markets in the next decade. And you see the numbers there, how relevant this is. So 1 trillion people in LATAM, and then almost 300 billion in India, and Africa growing fast, from a smaller base, but growing very fast. So this is why. So these markets are growing, they're interesting. But there's also other aspect, why we need to specialize on this. Because they're different. I'm not going to go, of course, into this, but we know that regulations are very different, tax aspects, business environments. There are 3 words here: complexity, volatility, and fragmentation. They're complex. You know it, right? From Brazil to Colombia to Argentina to Nigeria, South Africa. Each of these markets have their own regulations, their own tax aspects, and they're complex. So when you look into India, for example, and you want to enter, I think the first word everybody thinks about is, well, that is complex. They're also volatile in the sense that they're changing. The countries, the governments are wishing to evolve and adapt and be more competitive sometimes, be more protective sometimes, and we need to adapt to that. And then the final word is fragmentation. Although we want to look and present and deliver rising markets with one entry point, one view, one layer, below that they're definitely fragmented. So, and you want to enter Colombia, you want to enter Chile, these countries that are very interesting, but are somewhat smaller for a full focus of the merchant organization. So this is why I think these 3 words, in a sense, summarize what we've been seeing in emerging markets, and it's just going to continue on being like that, because each country has its own microcosmos, right? They want to accelerate, they want to copy, they want to copy another regulation from another country, but they have a different environment, they have a different business and regulation environment. So different needs, different population, different moment in their history.